This rebound, 185 or so days, back to new highs, the fastest since the 1930s. Does that make you nervous at all? Because that's not exactly the best historical reference.
You know, Brian, we got to put this into perspective, and I think that's what we have to do. Looking at this advance, looking at what we're seeing happening with markets, I think the best way to think about this is kind of hope versus reality. And Brian, to that point of, the fastest advance, up 65%, best advance since 1933, couple that together with the fact that we are now trading 17% above a rising 200-day moving average in the market. Put that into perspective, Brian, only 3.5% of all the trading days since 1928 have we traded at that level or higher from here. That coupled together with the fact that you've got very meaningful sentiment indicators that are overbought, the AAII numbers, and also when you look at the put-call ratios, these are at unprecedented levels. Now, Brian, to be clear, we're long-term optimistic bulls, but short-term in here, we do think that there is going to be some sort of tactical correction and pullback. You mentioned in the early part of your segment here about the NASDAQ 100, the first down day in 10 days, and you look at how much air you have underneath that index compared to where you're at with your 200-day moving average, and very easily, many of these popular averages, Brian, could see a 15 to 20% pullback or correction. So I want to sort of get that hope versus reality. And you also mentioned just the allergic reaction you're seeing with some of these vaccines. I think market's going to not act very positively if there's any sort of negative reaction to these vaccines.
Well, listen, first off, rarefied air, 3.5% of the time. Wow, that's a heck of a stat there, Craig. But based on your projection for next year, 44.25 on the S&P 500, a 20% gain from here, we should want a pullback. I know it's painful to watch the numbers go down. Red, much more of a psychological motivator than green, but you're a long-term bull. Maybe I'd want the market to pull back 10 or 15% because then I could just get a discount.
Absolutely. The breadth thrust that we've seen off of those lows was amazing. And again, looking toward year-end, 42.25 we think is a very achievable objective. But right now, I'm also seeing a stat, Brian, with this breadth thrust up, that only 2 times has this indicator that we look at internally here at Piper Sandler gone to 100%. It's at 98.3 right now. Okay? Only 2 times since 1967 has that gone to 100. A lot of good news is priced in, and I think a pullback will be a buying opportunity. But right now, there's still an opportunity that I think we've got to be taking some profits, waiting for this market to come back in, and then again, jump back into this market for the longer-term move. But right now, we've got to be careful coming into this year-end, Brian. And again, hope versus reality is what we need to start digesting as individual investors.
Yeah. Well, that's well said. Listen, we got just over a minute left in the segment. I'm not letting you go without getting some individual names, Craig, because your calls have been so right on the money now for years. You've been such a sage even in downturns. I'm going to start off with, I'm going to get 2 names quickly with the hometown homer where I grew up, Winchester, Virginia. Trex, T-R-E-X, kind of a fake wood decking company. You like the setup?
I like the setup in Trex. That we're seeing very nice price action in Trex. It's been a long-term winner, putting up great relative strength. There is no need to step away from this. I know a lot of individual investors, especially on the mid-cap growth side, still favor this stock. We like the setup on the charts and still looks very constructive. And by the way, Brian, we did upgrade the industrial sector just yesterday, and we think it's now is the time to turn that big stereo knob toward those kind of early cyclical kind of recovery names.
Yeah.
And industrials fit into that from my perspective.
Like an ITW, the old Illinois Tool Works.
The Illinois Tool Works is another terrific setup on the charts. A nice series of higher highs and higher lows, back above the moving averages. And again, great price action. And we see so many charts like this inside the industrials right now. I think too many people have spent too much time thinking about FANG and need to start thinking about these early cyclical names, Brian.
Shepard Smith here. Thanks for watching CNBC on YouTube.